Every year brings new financial lessons, but 2025 has introduced mistakes that could cost investors more than they realize. Even the smartest people are falling into traps that seem harmless at first, but quietly erode wealth, stability, and future growth. Today, we uncover the truth straight from the experts. Financial advisors have spoken, and their message is clear. If you want to protect your money in 2025, you must avoid the biggest financial mistake everyone is making right now. 10. Ignoring the power of compounding. Many investors underestimate how small, consistent growth can multiply over time. Compounding is the silent engine of wealth, but only if given time to work. In 2025, too many people chase quick returns, hopping between stocks, crypto, or new get-rich schemes. Every interruption resets the clock on compounding. The biggest mistake isn't missing a hot trend, it's disrupting your long-term growth by abandoning patience. 9. Letting inflation eat away savings. Inflation remains one of the most underestimated threats of 2025. Many people still park large amounts of cash in low-yield savings accounts, assuming safety equals stability. But when inflation outpaces your interest rate, you're silently losing purchasing power every day. Advisors warn that doing nothing is now the most expensive decision. Smart investors keep some cash for emergencies but move excess funds into inflation-protected or higher-yield instruments. 8. Neglecting proper diversification. In 2025, overconfidence is rampant. Many investors pour everything into one sector, whether it's tech, real estate, or cryptocurrency, because it's trending. But markets don't reward concentration. They reward balance. Diversification isn't about dulling profits. It's about protecting them. Financial advisors stress spreading risk across stocks, bonds, commodities, and international assets. A well-diversified portfolio absorbs shocks from any one market collapse. 7. Trying to time the market. Market timing remains the eternal trap for both new and experienced investors. Everyone wants to buy at the bottom and sell at the top, but no one consistently succeeds. In 2025, volatile markets tempt people into guessing when to jump in or out. Advisors agree this gamble destroys more portfolios than crashes do. The winners are those who stay invested, not those who try to predict headlines. Time in the market beats timing the market every single time. Patience and discipline remain unbeatable investment tools. 6. Overestimating risk appetite. 2025's market swings are testing investors' nerves like never before. Many built aggressive portfolios when interest rates were low, but now realize they can't handle the volatility. Advisors call it the overconfidence crash, when people think they're fearless until the market drops 20%. The lesson is simple. Know your true tolerance for loss. Your risk profile should reflect not your ambition, but your comfort with uncertainty. A portfolio that keeps you awake at night isn't strong. It's unstable. Stability is wealth's quiet companion. 5. Ignoring tax efficiency. Taxes may not make headlines, but they can quietly erode your returns. Financial advisors warn that many investors ignore tax-smart strategies like harvesting losses, using retirement accounts, or holding long-term positions for lower capital gains. In 2025's uncertain environment, every percentage point matters. Paying attention to when and where you invest can save thousands over time. The wealthy don't just earn more, they manage smarter. Ignoring taxes is like leaving the back door of your portfolio open for money to escape unnoticed. 4. failing to adapt to economic changes. Markets evolve fast, yet many investors cling to outdated strategies. Advisors see clients still following 2015 playbooks in a completely different economic world. Rising interest rates, shifting job markets, and digital disruptions demand flexibility. The mistake isn't making wrong decisions, it's refusing to make new ones. Reassessing your investments yearly ensures alignment with current realities. Adaptation isn't panic, it's evolution. Those who adjust intelligently thrive, while those who resist change get left behind. The future favors the adaptable investor. 3. Over-relying on real estate. Real estate was once seen as a guaranteed win. But in 2025, high mortgage rates, inflated prices, and rising maintenance costs are squeezing returns. Advisors caution against overexposure in property assets without liquidity. Homes are valuable, but they're also illiquid and heavily leveraged. Many investors underestimate the risks of tying up too much wealth in physical assets. True security comes from balance. Some property, yes, but plenty of diversified liquid assets too. What feels tangible isn't always financially flexible when you need it most. 2. Following social media experts. In 2025, financial misinformation spreads faster than ever. Millions take advice from influencers who lack credentials but speak with confidence. Advisors warn that emotional, unverified content is steering people toward impulsive decisions, especially in trending assets. Financial literacy requires research, context, and discipline, not viral sound bites. The biggest mistake is mistaking popularity for expertise. Before acting on advice, ask, does this source have proof or just passion? Your future deserves facts, not noise disguised as wisdom. 1. Neglecting financial planning altogether. The ultimate mistake of 2025 is not having a plan. Many people invest without clear goals, timelines, or exit strategies. Advisors emphasize that financial success isn't about luck, it's about direction. Without a roadmap, even great investments lose meaning. Planning defines your purpose, aligns your risk, and sets your milestones. Whether saving for retirement or stability, clarity matters most. A plan turns chaos into structure, and structure builds wealth. The biggest loss isn't in the market, it's in drifting without direction. Financial advisors are clear. 2025 will reward those who act with strategy, not emotion. The biggest mistake isn't making bad investments, it's making them blindly. Protect your wealth by staying informed, staying balanced, and staying patient. If you found value in these insights, like this video, subscribe for more, and share it with someone who's ready to avoid costly mistakes this year. Remember, knowledge compounds faster than money, and your smartest investment is always your awareness.